amongst employee on insider trading compliances. Friends, as you are aware that since 2020, we are continuously sharing this knowledge for the benefit of our participant and for the corporate world. And when we select this topic, our target is either some law is new, which requires some more clarification, or something the regulator is asking comments before making a law. These are our aspects. And sometimes when these things are silent or not there, then we try to do those courses or those classes which are important, where the confusion in the industry is too much. So in the line of this, today's topic is also on the awareness of the employee of insider trading. So I thank all of you for joining this, and I hope that discussion of today's will be benefited to everyone, because the insider trading law is not only confined to the company, but it is applicable to everybody who is doing trading in the market. Some of them. So sometimes we think that insider trading means company, but it is not. Everybody somewhere, if he has any information, he is part of this. So the compliance is very vital, and it upholds the dignity of a corporate world, safeguard market fairness, ensuring adherence on legal and ethical standard. Organizing, all organizations must foster a culture of compliance by equipping their employee, board member, audit committee member, and the person, those who are having any information, even your printer who is getting information in advance before the market knows, they are also involved. Your secretary, your people, your typists, those who are having this information, they all are part of this. So this knowledge of insider trading is very important, and everybody should understand that I am not having the information, but I having something. If it is going ahead out, it will be a problem. So we must understand the concept of this insider trading, its confidentiality, and entire thing relating to this. And then what is this concept, how it can be affecting me. So the management of listed company bear the responsibility to ensure robust compliance system, because sometimes what is happening, we think that employees are responsible. Yes, employees are responsible, those who are doing trading, but simultaneously the companies are also responsible. If it is proved that their compliance system was very weak, there was no communication, and they have a very poor system, then they are also responsible. Sometimes company and employee both are responsible, because one is system is not there and the employee is doing trading. So friends, today we want to discuss the strategic development of insider trading policies. Key focal points, remember, to all companies and the employee and those who are having a insider information. How the technology leveraging can take place, where we can monitor the risk, and developing a structured framework of violation metrics and best practices. Because you have to understand that sometimes you are doing something, but you should realize that some violation is there, and that violation will affect you. So now today's program, before I'll give my comments, I welcome all my speakers. Moini Vashne, she is partner and head, ESOP and Insider Law Services, corporate professional, and she is in the various committee of SEBI related to ESOP and insider trading, and she has worked so many definition of regulation with the help and help SEBI to do this. And Moni is looking after this. More than 500 companies are taking advice from her, and she has given more than 50 to 100 lectures at various places and various corporate for this. I welcome Mohini. Then we have Ravi Prakash, who is associate partner, securities law and corporate litigation, corporate professional. And Ravi is handling various cases and giving advice to various companies on these aspects. And he has personally handled various insider trading cases, multiple cases, and his knowledge will definitely helpful to us today. Friends, before going to the topic and I request to Mohini to give her presentation, I'm just telling everybody that the key concern we should understand for effective insider trading compliances. Now you have understood that there is a unpublished information. Trading is not restricted. Trading is not bad, or trading is not that per se you can't do. But there is a system that there is a window closing, you can't do trade. There is a contra trade, you can't do buy and sell. Okay. And there are some other things which you want to do it. You have to inform to the company and then do it. So trading is not. But sometimes what is happening, there's some insider trading. You got the information and you are doing. So today's topic is not only insider trading, but code of conduct also of the employee. Okay. And the company also. So key components for discussion today is policy and procedure is what? Development a robust insider trading system. Ensure timely and transparent disclosure. Importance of pre-clearance requirement and trading window mechanism. Training and awareness program. Conducting annual and quarterly training for the employee. That is also very important. Knowledge assessment of test employees, understanding whether whatever you have communicated, they have understood or not. Tomorrow they should not come that say that this is not aware. Regular email alert and compliance reminder for designated person, that is also required. Now, the role of designated person who is in charge and who is responsible, they should also understand that who is designated person. Uh, the employee who has the access of unpublished price information, how companies should define and manage their list of DPs and across various functions, responsibility of designated person, strict confidentiality of UPSI, how you can keep it separate, pre-clearance which is required that you have to follow, avoid contra trade, liability of board member and senior member, how board member can ensure accountability in insider trading and ensuring culture of transparency. Now, these are the things. Then you have to use technology to compliance and mitigating this. You have to develop a strong violation matrix or enforcement management. Suppose somebody is doing mistakes, then what is the system, how to rectify, correct it, and put the penalty. Then we have to see it is not that in India it is happening. It is an international concept which is borrowed by India and now it is taking place in India. Then how the role of corporate world which they should follow. So friends, we should understand that code of conduct is there. So one is insider trading, one is the code of conduct violation. So code of conduct violation is that the company has made a rule and you have violated this. So this is a part of the insider trading and the code of conduct is also very important and every company has to design code of conduct. Every company has to define that what is the system that you follow and how, if you are doing trading, to whom you have to take permission, when window is closed, that communication should be there. So one is the code of conduct violation by the employees, trading of unpublished price sensitive information, that is one. Tipping of other about a UPSI, you are giving information to others which is price sensitive and not known to the market. Failing to disclose trade as required because every year you have to submit your trade information and you are not giving. Then you are engaging in contra trade, buying and selling the same security within 6 months. That is contra trade. That is also restricted and as so many places. Leaking confidential information versus digital or personal channel. You are just sending something which is confidential. You are sharing. Now, this is the employee. Now, what is the violation of company in the code of conduct? Failure to implement effective policy if they are not following something. Weak surveillance and monitor system. Ignoring the delay action. Suppose you came to know that this employee has done some violation and you are not taking action against them. That is also you are tomorrow when SEBI will ask you, then you will be responsible. Encouraging or turning a blind eyes of insider trading. You are seeing that something is happening, you're not doing anything. that is also companies responsible. Providing misleading disclosure or delayed announcement. Sometimes what is happening, companies are getting information and then they are delaying. That is also the part of this which is there. Now, the question comes that what code of conduct violation and how this will be impacting companies. So what action company can take against the employee? So this is wide power. You may be having a contract with a company where you have multiple things. You have a ESOP, you have a bonus, you have a salary things, you have various increment process. But in all the appointment letter nowadays, companies are writing that you have to adhere by the insider trading law. And if you will not follow, suitable action will take place. So whatever one side is your appointment letter, where all these things are there, one side is this one paragraph, this can take away. Now, what are the penalties disciplinary action company can take? They can terminate your employment. Okay. They can put financial penalty in, and they can provide the salaries also. They can put criminal charges, and sometimes they can put matter to SEBI and other people, and then they can put in USA. Majority of insider trading cases, there is a penalty, and we have seen Rajat Gupta was sentenced 2 years imprisonment by tipping hedge fund that we have seen. The company can put market ban from stock trading of that employee, that they can also do, or SEBI can also do. Corporate penalties for companies. Now, the regulator can fine companies also if they have violated. Okay. The stock exchange can take action. Loss of investor confidence and reputation damage, that is also another part. So sometime, no doubt, if a employee is doing violation, that person is responsible. But sometime company may be not responsible, but reputation of company also affect, because you have this type of people, those who do violation. And director and executives also sometimes held responsible on this. So now, how to prevent insider trading related code of conduct violation for employees? Do not trade in UPSI and tip off others. Follow trading window closure and pre-clearance you should take. Use only official channel to communicate confidential information. It is not that you are sending a personal email and this is opening, or you are sending WhatsApp to the group. So other people, those who are not supposed not to have this information, they are getting. So then you are responsible. Report any suspicious activity by the company's whistleblower mechanism. Suppose you are finding something, you should inform. And tomorrow it is proved that you have this information, but you have not informed, then it's also a violation of code of conduct. For companies, what they should do: regularly update insider trading policies, enforce restrict compliances, use technology surveillance mechanism, train their employees for quarterly on insider trading, ensure immediate reporting of violation to SEBI and stock exchange, and avoid penalty, because sometimes you got the information that this employee has done violation, immediately inform the stock exchange and SEBI. Implement a robust whistleblower policy system, which you can do this. So ultimately, you have to prepare a code of conduct. Then you have to prepare the code of conduct violation related, how to do this. Then you have to understand and tell your employee that you can face this consequences: termination, action, ban, and the penalty. Companies can also face huge fine and this process. And then preventing employee. If follow this, they can prevent this type of thing. So now this is code of conduct, and we have seen this. It is not only the employee. Sometimes employee is responsible, sometimes company is responsible, sometimes both are responsible. So I have told you initially that employee is responsible if they violate, but sometimes company is also responsible because they have a very lesser system, where their system is very weak, and sometimes they got information, but even then they are not taking action. So these are the things, and sometimes both the people are responsible. It is not that in India it is happening. In United States, UK, law, European, Canada, Australia, Singapore, Hong Kong, Japan, everywhere these things are there. And interestingly, from 20 years to 5 years imprisonment is also there, other than the fine. 3 times of the profit and 5 million unlimited in UK, $5 million in UA upon, and then Canada 10x profit, Singapore 2,50,000 Singapore dollar. So, and then penalty also, imprisonment also. This we have seen in so many cases. In India, we have seen a Reliance Industry case that has happened in Infosys. The employee has done this. HDFC Bank, where employee has done this. Wipro, the employee has done this. Now, these are the cases where so in some company like Reliance and Infosys, where the employee were responsible, where the employee were held responsible, but other than the company also, like Axis Bank, both were responsible. Biocon, both were responsible. PNB Housing, employer, both were responsible. So this has happened. So friends, we should understand that this is one concept which is happening, and people are should be aware of all these things which is happening. So friends, today we will discuss each and everything on relating to this. But first very important aspect everybody should understand, that insider trading violation is risky. It can be penalized by company's policy. It can be penalized by SEBI. It can be penalized by other terms also. And it is not a win-win situation, and the reputation of company also goes down even if you are doing violation without informing company. So we must understand, and we should see how and what mechanism we should make, what company should do, what the management should do, promote the knowledge, training, and then test also for this. So everything now we will discuss, and Mohini will give a presentation and Ravi will talk about the legal cases. Over to you, Mohini, to do this.
Thank you. Thank you, sir. Good evening, everyone. So I'm just sharing my screen. Hope it's visible to all.
Yeah, Mohini, just go to the slide share.
Right, sir. Right. So,
It's okay.
Fine. Thank you, sir. So, sir has already very well set up the theme that the insider trading, if that insider trading compliance is required, so that compliance is required not only for the employee, the individual who is working in the company, it is also a vis-a-vis responsibility within the company management as well, that they have to formulate the system, they have to design the system in such a manner that every people who is responsible for the compliance of the insider trading regulations framed by SEBI, they must be aware of. Because many of the cases by the SEBI, we have already seen that there are very small, by mistake, the people have made those kinds of defaults and they have been penalized for that. And once the penalty is imposed on an employee, it's not only the question mark comes on the employee, but it also puts a question on the company. And what the company's question mark comes here is, we talk about that it is the corporate governance. Because now what the governance is not that we have a very good infra in the system, we have the very disciplined employees in the system. It also, the corporate governance means that how much the fairness and the transparency and the accountability of an employee in the companies, and the management, how it is taking how it is taking care of the interest of the stakeholders in the company. So how the insider trading is vis-a-vis leading to a corporate governance, reason being, if the person who is sitting in the company and have a first hand on the information which is not in the public, if that person is utilizing that information for its own purpose, either intentionally, or if he's not aware of that, he can't send this information to someone else, or he can't trade on this particular if that information he possesses. So it also affects the credibility of the management among the stakeholders. So that's the reason that why we say that if the insider trading defaults are happening, it also puts a question mark on the governance system in the company. So to move to more on that, because insider trading is vital, compliance is vital to for the upholding the corporate integrity, safeguarding the market fairness, and to ensure the adherence to the legal and ethical standards. And organization, for what the organization can do, organization must foster a culture of compliance. And this culture of compliance be equipped by the board members, the audit committee members, because they are the responsible in the regulation itself, that the audit committee and the board member have to create an internal control systems in the company, that everyone, by even by a skip, the information should not flow from one place to another. So these are the important thing which every company has to feel. Also, the company should implement a regular monitoring and surveillance system. A small example of it: if the company compliance officer is receiving the benpos, so whether if he is receiving the benpos on every Friday, so if he has to monitor, it's a simple one of the example. He can go and compare the two benpos. There are very technologically now the softwares are coming through which they can do. Even the RTs are also helping. If we come to know as a company that the people knowingly or unknowingly trading, then please the compliance officer, the management has to come forward and tell to the employees that this you are going, you are doing this. Might be someday you put into some default. So please don't take these are do's and don'ts. Don't do that. So these are the simple examples where the regular monitoring and surveillance system, a small practice the company can develop and can help that thing. Now, when we talk about that, how the insider trade, how we can prevent the insider trading, as already being covered, that we can have an establishing clear policies. The policies should be very much clear. It should contain in a very crisp manner, in a very layman language, because the people in the organization belong to different fields. So it should be very clear that if these are the do's, these are the don'ts, and if I do this, then the penalty will be this much, which can be imposed on me. So these are the clear policies are there. The timely and transparent disclosures should be from the company as well and from the employee as well. Then robust internal controls, we have already discussed. A simple example again I take. For example, we have the SAP system in the company, wherein the accounting, the access has been given to the each and every the related the concerned persons and employees in the company. We should be very much clear. It's the company's responsibility is that who requires that access of the entire system, he should be given. If he's not supposed to have the entire access, where the entire company's trade, sales, everything is coming, then don't give that access to that person. So that means it's an only a small controls which we can develop in the company and can have the we can mitigate the risk of being an insider trading in the organization. Next important one is that we have implemented this, but whether we have communicated this to an employee. So it's very important that we should have an employee training and awareness sessions on a very continuous basis to our employees. I have seen in my I have seen that many of the companies are doing it on a quarterly basis as well. So that's the thing, the practice you can develop in the company to make them aware of, so that they will not forward ki, okay, today's trading window closure time starts from 31st of for example, 31st of December. I have my trading window is closed. I can't do. Even I can't do. Even my relatives can't do. These are the examples, but it comes in the culture, in the habit of an employee. Once the company takes takes this practice, that they inform to and educate the employees. Similarly important, once the training is given to an employee that he should not get indulged in these kinds of activities, also the employee should be informed that there is a whistleblower mechanism in the company, and the company should establish in such a manner that if as an employee I come to know, it's my legal and moral responsibility for the company that I inform to the company management that this is kind of a the potentially the insider trading is being done or is being doing in the company, so that can be informed to the management. So this whistleblower mechanism also to be implemented by the company. To understand it more, first we just take an example that how an organization structure is. I have taken a manufacturing company example, simple, so that we have a various field of people in the organization. For example, we take that the company's office is in Mumbai. The board sits in Mumbai, the compliance officer sits in Mumbai. Now, it has a branch office in Delhi, within the Delhi northern region, they have the various factories, 2 factories now in Maharashtra, Tamil Nadu. They have a subsidiary which also has a factory. So what we have seen that's a manufacturing concern has a wide is a very vast we can say employee base, and the people are at a various places, and they have a very less connect with the compliance officer and the management who knows that what exactly the insider trading regulations are. Now, before we move to that, how we can do, first we need to understand that yes, every company has a code of conduct. Now, what the code of conduct on this company itself, what the example we have taken, it's that the designated persons are there who have to comply with that code of conduct. As per the law, the designated person means that the promoters, employees, CEO and the KMP, 2 level below that KMP and CEO, employees of the material subsidiary, and also any employee based on the functional role and responsibility can be categorized as a designated person. Now, coming back to that example, if we have the factory, so that means we have the various people from the various backgrounds in the company. Like the CEO, we have CFO and manager are there, but we have the people in operations, we have the people in marketing, we have the people in finance, engineers are there, legal people are there, production related people are there, quality inspectors we can take, investor relation people are there, even the important is human resource HR team is there. Now, if these people are there and they are being designated as a designated person in the company, because law says that we have to, based on the functional role, we have to take the people as the categorized as a designated person. Now, what the designated person knows? Designated person knows the specific area of the responsibility assigned to them, and they know about the compliance and regulatory requirement with respect to its position and its role, operational procedures, organization journal code of conduct, internal control and policy. Okay, for example, their salary policies are there. There are many safety policies. If the people are working at the factory level, they know that what the safety measures we have to take. We are working in the factory. So these internal control and policies they know aware of. And other critical functions directly related to their law, they are very much aware of because it's under their day-to-day activity. They are handling that. But it may not be practical that every designated person within the organization possesses comprehensive knowledge of insider trading regulation. So might be because he's busy in there. For example, the engineer is there who is a plant head. He is busy in the plant other activities. We can't. Might be he skipped that. Okay, I need not to pass this information to someone. I am not under the position that I have to give any reply to the to any reporter if it is approaching to me. I have to direct that person that you go to the our chief information officer who will be going to give the answers to this. So the person should be aware of that he can't do because it's the policy internally code of conduct, the control systems in the organization is that you can't give any statements in the public with respect to the organization information. So this is an example in it. Now the question here again comes back to that: do you provide training to designated person regarding their responsibilities under insider trading regulations? Or in case of default under these regulations, what procedure is followed to maintain integrity and ensure ethical compliance? Because designated persons are accountable for staying informed about compliance requirement and can't claim ignorance as a defense for a non-compliance. To support in this, it's a matter in 2019, it's a Kushal Trade Link case wherein 4 employees who were the designated persons in the company had traded in the securities of the company. Noticing 1 and 2 had traded in the trading window closure period and also had done the contra trade. Even assessing officer has, because they have, even the noticee 1 has suffered a loss of almost 1,23,000 rupees. But assessing officer says that no, you have the information, you have suffered the loss, but still they have imposed a penalty of 2 lakh on that person. Noticee 2 is an accountant. He contended that I don't have any price sensitive information at the time when the trading window is closed. because I am the person who has a restricted work to do in the company with respect to the direct tax, TDS compliance, and indirect tax law. I am not aware of what the profitability of the company is, for which the trading window has been closed. But still, the penalty of 2 lakh is being imposed. Notice A3, by default, he is a compliance officer, he should be aware of. But yes, he has given the notice of that trading window is closed from tomorrow, but he is traded one day before, but still he has even suffered a loss of minuscule 6,000 rupees or so, but the SEBI has imposed a penalty over that. So what we have thought is that even the noticee, either he is intentionally or non-intentionally if he is doing, but even it's an ignorance or he is not aware of, he has forgot about this, then even then the SEBI, if it comes to, can penalize that employee. So what happens is that it's not only that the employee name goes, it's also the company name goes in the public, that the person in the system is doing a small these kinds of violations in the company. Now, how can an organization address this gap? Organization can do an annual familiarization program. Many companies had done that, like annually other policies, like any other HR policies, they are conducting these sessions to the employees for a revision of that particular policy, or to update the employees that these are the changes or updations in the policy, other policies of the company. The nowadays all the listed companies have included in their annual familiarization program this PIT regulation programs also. Many companies have a very frequent changes at the position of the designated person, so they have done that immediately as soon as the person join, either one to one, they being given that code of conduct they are giving every employee, but they also trying to conduct the quarterly session so that the employee at his it's necessary for them, and also he being given an opportunity of that he can attend the training program on this and this date. So this kind of quarterly familiarization programs are also being done. Also, how you can ensure that the person is read. So important is that when now the listed companies, because the other confidentiality agreement are being entered similar in the similar manner, in the similar lines, the companies are also taking the confidentiality agreement from the designated person, that they should protect the sensitive, price sensitive information in the company. So that is the one thing. Another important is the knowledge assessment, which even the sir has said that there are now many of the tests, even on the technical or a non-technology based, you can create a test and you can check whether the person has understood that what the exactly the code of conduct has put in the responsibilities, that what are their do's and don'ts. So you can have a simple knowledge assessment test for everyone, and you can impose, and the company is imposing that the person has to compulsorily pass this test for their annual, before their annual appraisal system. So that is also one of the way wherein we can ensure that the person must aware of that what are the insider trading regulations applicable on it. And the last but not the least, many of the people have also started an exercise that they are sending the regular mailers. Example, we are taking like what are the open and non-open market trade. So these kinds of small mailers you can send to your employees. It's because we are, if in a one go we are making them key to study the entire law, even the people, even to for a normal person, even for a law person, if I say, okay, read the entire regulations in a one day, it's difficult to grab that thing. And the people in the organization belong to different fields. So better is to give them a very small snippets kind of a mailers, so that they must be aware of, okay, this is the open, like an example in this open and non-open market rate. So these are the different practices which the company can follow and can make their employees aware of that what the regulations has for them. So already many even we have emphasized much more on this, that why this knowledge is important, because it can expose the company to a significant legal, financial, reputational risk. Even engaging in insider trading can severely damage an organization reputance. Also promoting a culture of accountability is important, because it fosters an environment in the organization where employee feels okay, if I do this kind of a wrong, in the organization. So I can be penalized for that. My name goes in the public at the stock exchange. So everything he must be aware of. So this it creates a culture of accountability in the organization for that. And so this is that why this knowledge is important for an employee that he must have. Now, because now the point comes is that that yes, the code of conduct and the regulations are very has a various topics. So what we need to inform to an employee, we can categorize when you are giving any training or when you are giving any kind of communication to your employee. You can divide those things into various topics, like we can say trade restrictions on insider, what the UPSI is, what the pre-clearance are, what the disclosures need to be done. Like when it comes to the trading, so we should make them understand that the trading means buying, selling, agreeing to buy or sell any securities means whatever the listed securities are. If you are trading in that, then it will be the trading, and it's a open or non-open market trade. You have to be very careful. Even the gift is the trade. Many of the people are saying ki, if I am gifting, it's not a trade. I have gifted. I have not received anything in that. I have gifted in my love and affection to my daughter, to my even to my spouse. So that also a trade. We must make them aware of. So now, along with the trade, we have to inform that what the insider trading is. So we say if you are trading, if you are trading on an UPSI, then it's become an insider trading. So that we also must communicate to our employee. We should inform them that if you are having any, so what the insider trading says, insider trading is completely banned. You can't trade on the basis of the UPSI. Like you have the financial results, which is not in the public. You can't trade. Even you can't transfer and transmit that information to anyone. So we have to tell them. Many a times in our when we are going to the companies, we have received many questions from the employees that I not trade in the securities of my company. There are many other companies in which I trade. I don't trade in my company. So insider trading regulations are not applicable on me. So it's not. The people must be made aware of that. Even if though you are not trading, you inform to the employee that the communication of that information, which is UPSI in nature, and even the procurement of that information is also which is prohibited in the insider trading. So you have to very much be careful that when you are communicating a procurement, you have to comply with this insider trading regulation. So that's the thing which we need to communicate to the designated persons and employee in the company. Next question comes is that people say ki, okay, I don't know what the UPSI is, whether I have to approach to the compliance officer every time what the UPSI is. So we have to make them a little bit aware of that what are the 3 test principles in the law has given to test that what the information is UPSI. So we can inform them that if the information is is related to the company or its shares, it's not in the public. But if it comes to the public, it materially affect the price of the shares of the company. So these tests we try to communicate because the people who are the designated person in the company, they are at a position where they are taking the decision. They are managing the affairs of their branch, their particular level. So definitely they can access at a first level that if these 3 trusts are there, so this become a UPSI. And if any confusion is there, definitely they can approach anytime to their compliance officer and discuss that. So the company should inform to the designated person what exactly the UPSI is. We also you make aware of the people that the sharing of UPSI should only be on a need to know basis. It should be for the legitimate purpose, it only for the performance of duties, discharge of legal obligation, but you can't go and tell to anyone, even you are sitting in your family, in your friend circle, and you say, okay, my company has got this much of project, it has so much of value. You can't do. The people can't do. So the important thing is we need to communicate. We need to inform to the employee that even though not only the PIT regulation says it's restricted, it also that you should not disclose the company internal information, the sensitive information, not the price sensitive, even the sensitive information you should not go and tell in the public. So these are the things which we need to inform, the company should inform to the employee. Similarly, the concept related to the trading window closure period, we need to inform. And now it's very made easy for the companies that the PAN number of every designated person has been given to the designated depository, either CDS or an NSDL, what the company has. So they are freezing the PAN number to that particular respective security in the company. So now these kinds of default now being very much less when the compulsorily quarterly closure comes to. But with respect to the other kind of projects wherein the UPSI projects are there and the trading window closure from the NSDL and CDSL is not possible today. So you should inform timely to the that person that you can't trade when your trading window is closed, and these information timely to be communicated to the designated person at that time. Similarly, when it comes to the trade, employee should be informed that when I have to go for the compliance officer permission before trading, what the amount will be, whether I am you should inform them that you are not responsible only for your pre-clearance of trade, you have to also take the pre-clearance on the behalf of your immediate relative. So this kind of information also need to be informed to the employee. Next important one, structured digital database. The company has, all the listed companies have the structured digital data in place now. Even the company who's proposed to be listed has to install and has to implement the structured digital database in the system. So the employee should be made aware of that you have to punch the entry in the SDD portal of yours whenever you are transmitting that information. Also, when you are transmitting that information, we have to inform to the employee that you have to inform the recipient upfront that it's in UPSI, you have to maintain the confidentiality. So these small, basic things we have to inform to the this designated persons. Contract trade, we have the employee should be aware of that they can't take the opposite position within the period of 6 months. And it's simple, very important, intraday trade falls under the ambit of contract trade. So don't indulge in any kind of intraday activities in the script of your own company. Few disclosures on an initial, when you are becoming a designated person, your KMP, we should inform them. Continual disclosures, what exactly they on a continuous basis. Many of them have been also now a system driven disclosures are there, but still, if the relatives are trading, we have to inform that, you have to inform us. Similarly, annually, which they need to disclose about themselves, their relatives, the name, PAN, any change in that information, the holding which they have, or the trading they have done. So all these annual disclosure, if the code asks for, then the employee is under obligation to give that disclosures to the company. So simply what the do's and don'ts, the company can inform to their employees that they make a requisite disclosure about the person of their immediate relatives, their financial relationship, if they have any material financial relationship, what the compliance officer should inform them, not only the closer but also the opening of the window, that when the window is opening. Next, we can also say that we can make them aware of that what the that if he's working on this position in a company, how the law is applicable on him, that the company should inform, and what the safeguards which he can take when he is possessing that UPSI, that when he can trade, if he's trading, what the communication channel he can use. So all these things we need to communicate to the employee in that case. Sorry. Similarly, we have to key, you can't share with the UPSI with your relatives and friends, as example we have taken. So this don'ts also we need to inform to the employee. Similarly, we have to inform that don't believe on the hearsay information, don't participate in grapevine of that information. So try to inform that what are the don'ts for them. You have to inform ki you should have the complete NDA with them. If you're not signed an NDA, you can't send that information to the other person if it is an UPSI in nature. So these don'ts we need to inform to the employee. Now the question, now the is that why I am emphasizing and why we have conducted this today's webinar is that if the any kind of default happens, how it is going to impact the company's reputation. So it is more strengthened in this manner that now the regulation itself says that if they have given the reporting structure that if any person is fined any kind of violation of the trade, it's not that he's fined guilty or non-guilty. If the violation comes first to the knowledge of the company, the compliance officer, immediately the form has to be sent to the company, the stock exchange, and where what the things are being there, name of the listed company, details of the designated person where the name is being here. There is no masking on that. Second thing is that the transaction which he has done, what the value of the trade is 10 lakh or more. So then you have to inform more on that. Detail of the violation, action taken by the listed company. So all these things are going in the at the stock exchange. So this form need to be filled and to be given by the compliance officer at the stock exchange. So this is where the name comes at the in the disclosure at the exchange that yes, Mr. A has done this default, either knowingly or unknowingly. It doesn't matter. Your name goes in the public. So before summarizing and before ending this my presentation, so I say that it is not that only the listed companies has to make their designated persons aware of that what the PIT regulation is. We all know that now the PIT is beyond the listed company. All the people, all the intermediaries, all the corporates or any other consultant who are working in the fiduciary capacity as an intermediary where they are handling the information of the listed company, which may or may not, which may be the UPSI, we can say like an auditors or so. So they also have to make their designated person aware of this insider trading applicability on them. Now, the SEBI has also, in the regulation itself, the extension of this insider trading regulation is not only for the listed and the intermediaries. The application, this regulation is extended to all the companies proposed to be listed. So now the company, as soon as they file the DRHP, immediately they should start, and as soon as they are very much approaching to the, we can say that listing process, please make the listed your designated person informed that what the regulations has to they have to take care about the regulation. And also that is not that the listed company of the equity share only the this applicability is there. Even the debt are listed, all any other kind of rate units like rates in which are listed, even then the this regulation is applicable. So only the awareness is not that the employee should be only the listed company should be aware of these category of the companies, the corporates, the intermediaries and fiduciary. They also make their employees aware of that what the regulations talk about and have there for them. So at the last, we say that compliance costs nothing, but non-compliance cost everything. So thank you.
Okay.
Just
Thank you, Moini. Thank you very much for giving a detailed and very informative presentation and discussion you had. You are absolutely right. We organize a program, and program was related to intermediaries, that how the inside trading is applicable. And when we discuss about this issue, then some of the prominent people, those who are in the profession, they were surprised that they were saying that they were not aware that this law is applicable to them also. So the simple point everybody should understand that insider trading law is so wide. It is not only listed company, but to be listed company, that is one. Sometime what is happening, you are unlisted company, your employees are also there. Or say example, you are chartered accountant, auditor of a company, and your team is there, and you are doing audit of a listed company, and something you came to know or your team came to know and they shared with others, same law is applicable to you also. And this is the way listed companies are penalized, listed company has to do, you are also. So the point came that what these intermediaries should do, they have to follow their code of conduct, they have to make this, and if they are doing any work of listed company, it is not that you can write in your profile that I'm the auditor, I'm the secretarial auditor, I'm the consultant of the listed company. When you are becoming a listed company's auditor, consultant, you are posing a greater risk. And for this, it is not that something free. You have to follow the proper procedure. You have to make proper code of conduct. You have to tell your employees not to do trade, and Everything what company is doing, you have to do. So this is a very wide area. And sometime in the last program, I gave this example also. In USA, the managing director or CFO were discussing in the car, and the driver heard about their conversation and told to his friend to buy this share of that company, which will go up, and the share price. And he has done this, and the driver was held responsible for insider trading, and the other person is also. So you can understand that this driver is not designated person. This driver is not somebody is telling him, or he is privy to some document. He was driving. Nobody thought that the conversation he will listen and do this. So you can understand the gravity of situation. Anybody who has price sensitive information, he should be very careful before market knows. If you know and if you are using it, then you are doing this at your risk. So you should be very careful and you should make all system. Now, friends, this Mohini has told you everything about the what system, what you have to do, what are the things. Now come to the legal part. Sometimes what is happening, you think that what is if I'm doing this, what is wrong? If I'm doing trading and I have done this, what is the big issue? Big issue, even if 2,000 rupees, 5,000, 10,000 rupees, or 20,000 rupees profit, sometime make you responsible for insider trading violation, and there is a penalty also. Okay, so there is no escape for the amount point of view. And then SEBI, stock exchange, company, all can take action. Now, what action has taken place in the legal arena or in the SEBI's, that Ravi will tell you. So you will realize the sanctity and the seriousness, what Mohini has told and what I have just now told you in the beginning also. So Ravi will cover all three aspects. If employee is doing something wrong, what are the penalty and what are the cases? If companies are doing something wrong, what are the penalty? And we will cover only to the companies non-compliance. Some companies delayed in taking action. That we are not talking about the complete insider trading things. We are just talking today confined to the code of conduct. So if company is not following this, company is not taking action, company is keeping system very loose, then company is also responsible. Company is responsible. And some cases where both are responsible, the employee as well as company. So this is one area which is very, very tough, and one should not ignore it at all. Over to you, Ravi. Please tell us case law also, tell us the legal jurisprudence also, and how things can, people should understand the gravity and seriousness so they can protect themselves. Over to you.
Thank you so much, sir. And I think I would try to not repeat what Mohini ma'am has already stated. At the beginning also, you yourself had given some cases that opened Pandora's box for regulators, not only in India, but across the world, how to handle the menace of insider trading. Our journey with insider trading formally started as a country and as a securities market. Started way back in 1992 when the regulations, the PIT regulations, 1992. And then metamorphosized in PIT regulations 2015. There are two aspects of this law. One is the aspect of insider trading, the violation of insider trading, which is dealing on the basis of UPSI, that itself being committed, which is called the classic case of insider trading, or the insider trading which happens by tipping somebody who does not deal directly by himself or herself, but rather tips it to somebody else. That's also another form of insider trading. Then there is another type of violation or another set of issues with which we are concerned today is the issue of internal control system. Because regulators across the world, and SEBI's own experience with insider trading is that it cannot be annihilated from the securities market because this is not rooted in the securities market. The willingness to enjoy the unevenness of level playing field is something that is rooted in the psyche of humans. And well, this is nowhere an analogy to say all apples are rotten, but it is also a fact of life that apples get rotten, and therefore nobody can say with surety that no apple will be rotten. Apply this analogy in context of humans, particularly with respect to insider trading. So because this is something which is unavoidable, may happen, punishing only insider trading would have been a post-mortem exercise in which even though post-mortem is performed and penalties are levied, the patient is dead or the person on whom the post-mortem is being performed is dead. So damage has already been done. Then with global experience and little innovation, what transpired or what came out is called the concept of internal control system. And more than the concept, the thrust and the thrift came that let us push this agenda that companies, intermediaries, and fiduciaries should have robust internal control systems, robust code of conduct, not only on papers, but it should also be monitored very carefully and meticulously, so that we do not need to do post-mortem in as many cases as we would need to do if there are no internal control system. In other words, it's a ridding of all technicalities. It's only a precautionary measure. Before somebody goes on and commit insider violation, there are a lot of red lights at which someone has to stop. And if someone is not stopping, clearly he would raise alarms and signals. And that's where he has to be or she has to be punished. That's the concept of it. I will not get into, again, why a code of conduct is required, why, in fact, the entire ecosystem is required. That has been taken care of by Mohini ma'am. Let us discuss about how this works. So, under Regulation 8, there is a duty to create a code of fair disclosure regarding UPSI, and it has to be implemented by the board of directors. Then there is also a code of conduct for trading, which comes under Regulation 9, Sub-Regulation 1. Again, board of director of every company is required to formulate this code of conduct, and it is under the supervision of the board of directors that these codes are to be administered and implemented. Although in case of code of conduct for trading, which is generally known as PIT code of conduct, by professionals and designated persons of listed companies alike, is a code that provides for when someone can trade. And this someone is the designated person or the director or promoter or their immediate relatives or family member, considering the new change definition. When they can trade, when they cannot trade, if they have to trade, what is the procedure for trading, and what are the reporting requirements. An interesting aspect of code of conduct related violations surfaced in a case called, this is a case from SAT, an appeal that was filed in SAT. Rajendra Kumar Dabriwala versus Securities and Exchange Board of India. It was decided on July 5th, 2021. As Pawan sir said, that we need to really carefully examine what is the impact if a company is lax in monitoring the code of conduct or monitoring and ensuring that the internal control systems are working fine and up to the standards that the regulator expects them to live to. So this case, I think, will tell our audience something significant about what happens if a code of conduct is not properly implemented. So in this case, the entire discussion came to the point that who shall be liable if there is a violation observed with respect to the code of conduct. Should this be a person commonly known as compliance officer? And should only alone that person be penalized and held liable for violation of code of conduct? Or beyond that compliance officer also? Ultimately, tribunal held that since the code of conduct is to be administered under the overall supervision of the board of directors, chief executive officer, and there is a reporting mechanism that the compliance officer has to report to the managing director, chief executive officer, and audit committee. It cannot be said that it is the sole responsibility of compliance officer and nobody else in the company should be bothered at board level or at committees level, which are, for example, the audit committee, about how the code is being implemented. Particularly also because now in the regulation itself, there is a requirement of audit committee reviewing and approving the efficacy of their internal control systems. They have to verify the adequacy and effectiveness of the internal control systems. And there is a report that goes, probably part of corporate governance. So therefore, we understand that the liability is not solely of a single person. The liability is of the company, board of director, head. People are at the top brass of a company, and people who are concerned with day-to-day affairs of the company, they can also be held liable for the violations of the code of conduct. So number one is that. Now, this is not just to indicate who's liable. This was to indicate something more significant, that what regulator wants, and the clear message is that you implement this system seriously. Because number one, let's go back 5 minutes and see how did we come here. Insider trading, if the regulator only punishes the insider trading, it will effectively be a post-mortem exercise. Damage will already be done. So the best way to stop or curb and mitigate, because there can be no closure or stoppage, absolute stoppage of insider trading. So what they say is to mitigate it to a large extent, to an extent that it does not and it cannot interfere with the market behavior and price discovery mechanism. So they say that you put strong internal control system, follow through it strongly. And if somebody is lacking in following through the internal control system, kindly see how the regulator views it. They view it from the point that somebody is deliberately or knowingly or unknowingly, they are not maintaining the system which is necessary for us to ring fence the market from the malice of insider trading. So ultimately, one will be perceived to be antithetical to the purpose and objective of the regulator. That's number one and simplistic way of putting it, how important it is to adhere to these internal control system. Then next comes the issue of what would be the right way of adhering to these internal control systems. Of course, one has to put, there are requirements of law that Moini ma'am told, maintaining of SDD, maintenance of opening and closure of trading windows, carefully evaluating trading plan and approving them, then ensuring that there is a system, robust system for receiving, examining, and then approving the pre-clearance request. Because a great deal of problem also arises. If let's suppose somebody comes to a compliance officer on an X date and says, approve my pre-clearance. He gives a declaration that today I do not have any UPSI. You give me pre-clearance, trading windows open, let's assume. And the compliance officer approves the pre-clearance. Later on, before the trade is executed, the person gets access to UPSI. Let's suppose that access to UPSI came through came through a letter that came from some external agency, a show cause notice or in some other form. The letter was marked to the person but did not reach to his desk. He or she traded into the shares. Um, it's a very conundrum causing situation, because person when applied for preclearance was not in possession of UPSI, even though the letter was marked and it was received in the company, did not reach the letter of this person. So he was not in possession and he has traded. In hindsight, people regulator may see, and it may appear at first blush that this is a violation. So there must be a system before the preclearance is approved. Let's suppose, little twist in the facts, if the letter is received in the company before the preclearance request is made, although it has not reached to the DP, there must be a system to examine what all external and UPSI are existing in the company, whether the SDD captures it correctly and appropriately, and all of that must be verified in order to assess whether preclearance can really be given in this situation to that person or not. And then thereafter, preclearance should be given or not given. So this is just another indication that the systems which are ought to be maintained, which we generally say the code of conduct and the entire allied ecosystem to it, is not to be maintained only as a paper formality, but it has to be a workable system. Means that the SDD, if the entries in SDD are proper, up to date, and accurate, covering all trail of UPSI, it will be easy to correlate if a person, one of the DPs apply for preclearance and gives a declaration that I do not have UPSI, it is easy to correlate from SDD if the person is saying, giving correct disclosure or not. Not in all situations, but these are the systems that you have to put. Essentially, in this webinar, we are talking about what sort of system to be put in place and what sort of educative exercise companies and intermediaries and fiduciaries need to do with their employees or designated persons in order to ensure that they do not run the risk of insider trading. Why this is necessary, Mohini ma'am already took it. I'll just give an example. JP Morgan, Rajaratnam, Martha Stewart, Rajat Gupta. These are some of the cases, and we'll just bifurcate them into two portions. Cases where penalties were inflicted at the employee level or at the personal level because there were violations at the individual level. And then the cases where the penalties were meted out both at the individual level and at the level of the corporate, on the basis that the individual could violate because the corporate did not have enough guardrails or safeguards or robust internal control systems in place to stop such a behavior from occurring or repeating itself. In fact, if regulators have gone to the extent that not having these internal control systems, despite it being made mandatory by the law, is sort of a motivation given by the companies to these people, to the unscrupulous people. Let's see it like this, that if it is mandatory to put CCTV camera in front of a building, suppose hypothetically, and somebody who does not put it, person is motivating the unscrupulous element, thieves and all, to come. It's a welcome invite for those unscrupulous elements. So Rajat Gupta, Martha Stewart, and Raj Rajaratnam is a case where these individuals were punished because they were individually involved in the crime of insider trading. But there is a case of S&P ratings, Standard and Poor's ratings, in which there were leakage of data and the company had lax governance processes. They did not have robust internal control systems or strong mechanisms and procedures for safeguarding the leakage of data. So they were also punished. Same was the case with Deutsche Bank, where because the company failed to monitor the employees executed illegal trades, bringing bad name to the company itself. Well, these were some of the Western world examples. You have a lot of them in Indian context also. Uh, I think cases where employees were punished, the two cases, the case of HDFC Bank of 2021, where the employees were trading on based on UPSI, they were penalized. Wipro, again, quarterly results were leaked, and then the employees were punished because there were findings that the internal control systems did not lack any inherent deficiency, providing motivation or an opportunity or a welcome invite to this person to, benefit from the leakage. But the person was found at guilty to abuse his position, his or her position, and then conduct the illegal trades. But there are three cases. There are many more, but I'm just taking three of them. Axis Bank case of 2021, where both company and employees were punished for weak monitoring mechanisms that they had. Biocon case of 2022, both company and employees were penalized for not being able to protect UPSI. And PNB housing is also one of the case where internal lack of internal compliance has led to penalties. Now we see that the liability is not only limited to the person who is breaching the provisions of code of conduct. The true test is whether the breach is a deliberate breach by the individual or the breach is a result of lack of care and lack of proper systems being maintained by the company. I'm not suggesting that there has to be a link or the regulator needs to prove a link between the two, that because of not having the processes, the DP or the employee did a particular sort of wrong trading. The standard of holding company liable is to see whether what is required by the statute is followed by the company or not. Now, in these matters, the statute is a very dynamic one. It does not tell you what all you need to do. It tells what all need not to be done, and that too broadly. So one has to prepare a meticulous system by using innovative ways. And because one size will not fit all, so therefore the law could not have even prescribed for every sort of company what needs to be done, but it clearly tells what should not be done. Because what should not be done, for example, is that you cannot have an ad hoc system of pre-clearance or ad hoc system of structured digital database. So this is what law says you cannot do. It rather says, it tells you also broadly at many places, indicating what sort of system they are, and they have envisioned that the companies should have. For a structured digital database, there is detailed prescriptions, how the entries should be managed, tracked, preserved, logs should be maintained, time-stamped. So all of these, the regulator has prescribed. Now, bouncing back to the core issue, to when a company would be held to have not complied and bring liability on its own, even though the violation might appear a stray violation by a designated person or a few of them, would be in a situation where the regulator is able to find that the company itself lacked in establishing a mechanism which aligns with the framework prescribed in series of regulation 15, 8, 9, 9A, ranging from code of fair disclosure to whistleblower policy, to having a robust code of conduct, a process to report disclosures, to examine trades on a regular interval basis, and to preserve leak of information, unpublished price sensitive information. So on all these parameters, any stray violation, before even penalty comes, it renders a company open to scrutiny by the regulator. And that's where the problem starts, because on scrutiny, Pandora's box gets opened. So the best way to mitigate all these risks is to use technology, have a clear framework of these internal control systems, customized basis the organization structure, the sheer number of designated persons that a company has, geographical locations of DPs, mapping of their immediate relatives meticulously with them, and ensuring that the system really does work and does not only remain on papers. Moving forward from here, let us assume that a default has occurred within the four corners of the code of conduct. What is the next course of action that a company needs to take? One of the circulars issued by SEBI on this topic is of 23rd July 2020, and that circular talks about prompt information to the stock exchanges where any violation is observed. With respect to the code of conduct. Now, this prompt has caused a lot of confusion as to when this disclosure is required to be filed. I'm only expressing my personal opinion because interpretation is an exercise which is sometimes marred with different hues and colors. So I'm just presenting what I feel on it. There would be cases under code of conduct which would be open and shut cases. Cases where the bare perusal of a record would showcase that a violation has occurred. I'm not going into the merits of each and every such case. And there would be cases where it needs to be inquired and examined, and there would be nuances whether the violation has triggered or not. So I think where the word promptly is to be understood, that there should not be any deliberate suppression of disclosure or delay of disclosure. And so far as a company can showcase that necessary steps and logical steps, because I said, if it is an open and shut case and a company is taking months and months and quarters to disclose about it, maybe not a good defense, but if it can be showcased that the inquiry was required, considering the nature of the facts, to determine whether there has been a violation or not, because otherwise disclosures would be reckless. Everything that you get and as a suspicion of whether it has violated the code of conduct, you file a disclosure, and if later on it is found that the disclosure that the person was not guilty, then another disclosure for that. It might create some confusion, but as I said, these are my personal views. So promptly would have to be interpreted in the sense that there should not be any deliberate suppression of disclosure or delay of disclosure. It should be made as soon as practicable, and real efforts should be made by the company and compliance officer, board of directors, and audit committee to ensure compliance with this circular. About the different type of cases that arise under code of conduct, these are usually violations related to contra trade. Contra trade is a prescription in the code of conduct and by the umbilical cord of being connected to PIT regulations, of the PIT regulations also, which says that a designated person cannot take two opposite positions while trading in securities within 6 months of each other. What I simply mean by this is that if I'm buying today on 31st of January 2025, for next 6 months, I cannot sell. And if I'm selling today, for next 6 months, I cannot buy. So this is a contra trade restriction. And this is liable for disgorgement. If any profit is made out of the contra trade restriction, the gains are, or the profit is liable to be disgorged. In the Model Code of Conduct, the only thing which is liable to be disgorged by mandatory prescription of law is any undue gain that is made on account of contra trade. Let us discuss two things here. What could be considered as gain or profit for disgorgement, and what is a contra trade? So we have discussed contra trade. So let us see what is this profit. For contra trade, and because what is disgorged is a gain. So let us reverse, and what can be disgorged as per the mandate of SEBI is the profit that one makes that can be disgorged if it is illegitimate profit and classified as undue gain or profit. And also what comes under the ambit of gain is loss that is avoided. So if I was to incur 100 rupees loss, if I had not acted in a particular way or omitted to act in a particular way, and by acting in a particular way or omitting to act in that particular way, I saved, let's suppose, 60 rupees. I would have incurred a loss of 100 if I did not do a thing or did not trade, or if I traded. But because I avoided that loss by doing something, and my loss is only 40 rupees, 60 rupees I saved. This 60 rupees that I saved from loss is also a gain. So in the world of disgorgement, profit are of two types, like sentences in English, active and passive. Active is the profit, the money that one really makes. And then there are passive profits, which is the money people save by avoiding the losses. So in contra, of course, because disgorgement applies to both these concepts, both of these are to be seen for contra-related disgorgements. Then again, what comes under the code of conduct violation is somebody did not apply for preclearance. In preclearance itself appears to be very simple, but when you see what kind of practical type of situations come before compliance officers, and due to also on account of my own personal experience dealing with these sort of violations, is that you would find somebody joined a listed company who was an earlier employee when the company was not listed, rejoined the company. Now this time the company is listed. So the question arises whether the DP should be deemed to be connected because he has worked in the company earlier. Of course, obvious reason to it would be no, but then these are meted out with other and added complexities. I would not get to the facts of the case. But in a particular case, it was to be seen on from which date the code of conduct will apply. The code of conduct this was for the purpose of checking the violation of preclearance. The code of conduct will apply from the date when the appointment letter was handed over to the designated person, or on the date when the policies were disclosed. Because on appointment letter, when the offer letter was sent, policies were not sent. The employee accepted the offer, sent it back to the HR. Later on, induction program happened where the policies were told. So until the policies are showed to the employees, they have a chance to go through it and understand it. They are educated about it. Liability cannot be fastened on them. It is true that ignorance of law is no excuse, but the code of conduct is a law that the company makes. And as Mohini ma'am correctly said, a listed company does not hire employees based on the knowledge of code of conduct, model code of conduct that is contained in PIT regulation. A listed company also at the end of the day is a business being run by professional. It requires manpower from the relevant with relevant wealth of experience and skill sets. A company might require at one end mechanical engineers, another company would require chemical engineers. and at the same time, accounting professionals, accounting resources, legal resources, resources of marketing management, so varied types of resources. One cannot expect everybody to know each and every technicality of law. So therefore, there is the need of educating them. And to that extent, I think there is a lot of work that needs to be done by Indian corporates. Well, significant move has been made by a company that remained trailblazer in terms of governance. But if one was to give a remedy to the compliance officer, fiduciaries, intermediaries, and those who are responsible for administering compliance with this particular law, the Code of Conduct, NPIT regulations, my advice would be to go all out with reviewing your internal control systems. Then go all out on educating your people, designated persons, and also, if possible, their immediate relatives about how to comply with this law, sensitize them, what are the outcomes and disastrous outcomes of the non-compliances, because a lot of companies have framed penalty matrices where they are charging up to 125% of profits. Somewhere this is some companies which have replicated the model of SEBI imposing penalty or disgorgement. They have gone three times, up to the three times. So therefore, penalties are really harsh. And more than this, it may also result in loss of job. Because if it is a very serious case of code of conduct violation or a repetitive violation, because there are some substantive violations in code of conduct also. For example, contra. Not applying for pre-clearance and trading in heavy volumes without obtaining pre-clearance, trading during trading window closure, and lot many. There are, as I said, there are a lot of hues and colors when you talk about violations in the real world. Theoretically, they appear to be a few, but within those, there are hydra heads of violations, 100 tentacles that pop up. So I think the bottom line of this is to sensitize, educate, and thoroughly review. And rather than something that exists on paper, you make a system out of it. There is a reason why it is called internal control system. This is not supposed to be on paper. This is supposed to be in the culture. So I think, sir, that's where I would like to stop it, because this is really a vast topic. And I think it also branches out to other aspects of law. We can take all of that in the question and answer form.
Hello. Yeah, Ravi.
Yes, sir.
So, Ravi, just tell one important point.
Yes.
Suppose the employee has done something wrong.
Mm.
So, what protection has employer to safeguard
The
this?
employer has only one protection: to prove that they complied with the requirement on them that is casted by the law. The employer has complied with that requirement. There is no other defense. Uh, Shifting the burden is no defense. People have tried and failed. In a past case that I mentioned of uh, Rajendra Kumar, I'll just tell the name. Rajendra Kumar Dabriwala was decided on July 5th, 2021. There was an attempt to shift the burden of liability on the compliance officer by the board and other persons who were involved. But the SET clearly said, no, you cannot just hold the compliance officer solely liable for it. They never wanted to, diminish the importance of having these internal control system. First requirement is, if I have to put it this way, in my opinion, if internal control systems are not robust, more than DP, the company should be punished. Because that is the main requirement of the regulations, that there must be strong internal control systems so that we never have to deal with the crisis of insider trading at mass level within the companies and across the industries and in our securities market. So it's just like having a city without without a traffic system, having road infrastructure within a country without traffic signals, without any rules for that govern how people will drive and how they will not drive. It is that dangerous.
Mohini, how do company protect this? What is the technological use they should do?
Important is the technological use is like I said that the company has already the internal control systems. Already there are various systems in the company. Internal control systems, we can say that many of the companies is now starting and implemented that the mails, like any other, there are various softwares in the company wherein the information can't go to that email ID which is not being registered at this in the company. So, for example, a simple thing is that if I am try to transfer as a designated person some information on other mail ID which is not registered, which is not whitelisted in the company, so the mails can't be sent to that person. It bounces back. It restricts me. Similarly, so these kinds of technological small with the help of this, we can have the systems inbuilt in the company.
Okay. Mohini, please explain the meaning of the term payment is based on arm's length transaction indicated exclusion from Schedule B, Part 14 explanation. Is it connected to this?
So I think he's trying to ask for what is in the material. There is a concept of material financial relationship in the insider trading. That as a designated person, if I have given a 25% of my annual income to some person, not on an arm length basis, then I have to disclose that person's PAN number to the organization that I have shared my 25% annual income with him. So that arm length is that, for example, arm length means that if I have given him a loan for which I am charging some amount of interest for it, and also it's my regular business that I be giving some amount of loan to everyone, so then it is an arm length basis. But if I have given only 25% of my annual income as a gift to someone, so it's not an arm length transaction per se. So yeah, I have to disclose that person's name to the company. So that is the arm length person.
Okay. Does the promoter group be called as a designated person?
So in the law, it's written all promoters. They have not made it including promoter group. So it's up to the company that through its own code whether they want to include the entire promoter group in the system.
Or Mohini, to include promoter group is a very wide thing because
yes,
I'm the promoter, my relative who is coming to that definition. So what is the normal practice?
now the companies are not including because many of the people who are falling under the promoter group, many a time they don't hold the securities in the company. But we can't say, but from the designate, and why the designated person definition is definition for the compliance of the code of conduct. So the code of conduct is not applicable on the promoter group if we don't include them in the designated person list. But PIT regulations are still applicable. Reason being the promoter group PAN number, even though they hold shares or not they hold share, in the system driven disclosure, every company has to give their PAN number. So regulations are applicable with respect to the disclosures, but with respect to the code of conduct when it comes to, so the company, if not including the promoter group, the can do. Yeah, Ravi want to add something in this.
I just have one small addition to make here. In case of an individual being a promoter of a listed entity, because the immediate relatives of a DP, promoters by definition are DP. Immediate relatives of promoter are promoter group, but here they will be categorized as DP. So far as individual promoters are concerned, their immediate relatives will be categorized as DP by operation of the provision of PIT. Story is different and rightly pointed out by Mohini ma'am when the promoter is a corporate entity.
Mohini, this is not a question for the point. How can an organization address this gap? One method is to have a help desk in the corporate office with this well-informed person to provide the necessary information to the employee, etc., on the code or any provision of insider trading so that he does not violate any provision knowingly or unknowingly.
So the help desk in the help desk for the PIT can be done in the secretarial team, because the compliance officer is uh, implementing this code of conduct and the regulations in the system. So if the company wants to have any help desk system in the company, yes, they can do with the secretarial team.
Okay. There's a very question mark. Somebody asked, what is UPSI? Just can you explain?
So UPSI, so any information becomes an UPSI when the information takes a shape that if it comes in the market, it materially affects the price of the company. So that information become an UPSI only when it changes this or pass through this test. So then only that UPSI comes. For example, the financials during the quarter, these financials may not be the UPSI, but as soon as the quarter ends, that the information, the financials become the UPSI. Reason now the company is making adjustments and they are able to know the profitability of that quarter. So it's an
Okay.
example through which we can understand that.
One more suggestion, would it not be prudent for SEBI to align with various regulation issued by it whenever possible? For example, the concept of immediate relative now having a place at PIT has undergone a change in LODR. Compliance officer is designated as KMP in LODR and the like, for your views only. Ravi, you want to say something?
Sorry, sir. I think there was some problem in listening to the question.
He's saying that SEBI should align all these various definition. For example, concept of immediate relative now having a place in PIT has undergone a change in LODR. Compliance officer is designated as KMP in LODR and like this. So various issues are there. So
It's I think well, whatever SEBI brings in form of amendments and all, they are experiment based and based on some past experience that regulator has, both experiment and experience based. So I think to say that there is a need of alignment or there is a greater misalignment between the provisions, I think those who can comply, those who really intend to comply can comply as the regulations stand today. Surely, clarity is something like perfection. There is no limit to clarity. One can say that I need more and more clarity. That can be taken.
okay. Compliance officer means any senior officer designated and reporting to the board to the director, head of the organization. Case board is not there. What
Yeah.
does the term if the board is not there signifies in this situation where we talk about the share trading of a listed entity? I think this question is something is wrong. Please write it again. I'm asking next question. When trading plan is submitted, the compliance officer is the only officer to provide the approval money. Okay. Whereas in case the impracticability to execute of trading plan, there is a process to go through the audit committee. Is there any reason for this?
If we remember the earlier provisions of trading plan, so it's a mandatory on the person to comply with the trading plan what they have given. Now the various their various exemptions are being given. There are various situations now mentioned in the trading plan regulations that if the person it's not practically possible, that they can go to the compliance officer, and compliance officer has to give it to the audit committee. It's because you are trading in advance, you are the person who are all time in the possession of UPSI. That's the reason you have given the trading plan of yours. So considering that kind of a significance, the things have been given to the audit committee. Also, the things are in public already. So better is that the committee will take an informed decision on that, whether that's genuine or non-genuine.
Okay. When a company is going to listing it for first time, at which stage the SDD entries become mandatory?
So it's now the recently NSE, so NSE stock exchange has issued a circular in this that the company is going to be listed on the filing of the DRHP. They have to comply with the SGD. They have to implement the STD. So it's now the companies who are filing their DRHP have to start implementing the SGD. to the best of our understanding of the law, the entries, they have to start from the day when they have filed a DRHP, because regulation or PIT regulation says that the company is supposed to be listed, and the proposed to be listed when they are filing their offer document. From there, the information protection law starts applicable on them.
Okay. How can an organization implement a well-designed internal control system, and how does the organization ensure that it is implemented well across all the offices, asking from a perspective of a manufacturing company?
Ravi, if you can add on this.
Well, the question is very broad. I think I can give an indicative answer.
Yeah.
So you'll have to see that the flow of the processes which require communication of trading window closure to people. I'm assuming you have multiple manufacturing plants everywhere. DPs are there. So the information regarding trading window closure should reach everywhere simultaneously, real time, without any difficulty. Sensitization should be at all the DP levels, at plant or headquarters. It should be a common system, IT-enabled common system through which all the persons can apply for pre-clearances. In your situation, should not follow a process where physical handling of applications or forms are there, because a lot of time gets lost in transit. Uh, and things like that. I think you should go for, if it's a manufacturing company having multiple plants, DPs spread across states, interstate, or across the country, or even internationally, go for a system that is built on IT model and provides clear guidance. It is very simple. The UI should be, the user interface for that system should be simple and understandable by even non-technical persons. So make it that. It is not necessary. See, your aim is to build a system that people can use for compliance, for ensuring compliance. That system need not to use the same language of law. That system could be as simple as the system that we as investor use at Grow or Zerodha. It can be a really interactive system for DPs. So you have to ensure compliance, but they need not to suffer the technicalities of compliances. It should be easy for them. I think that's my advice to you.
Okay. In case there is a violation by employee, can a company make an exception on penalty structure by lowering the penalty amount on the basis that trades were done by immediate relative?
It's not a basis of lowering down the penalty, because immediate relatives are liable in the same way the designated persons are liable. There is no difference of liability between them. The known grounds for relaxation are something else, not this, that the person who's suffering a penalty is merely immediate relative. So I think the short and summary answer is no. It can't be a basis of reducing the penalty. And interestingly, there is no minimum penalty prescribed. The companies can set it, but it should be uniform, standard. There should be certainty in the process that the company adopts for punishing one employee. It cannot be that I am punishing junior DP with very high penalties, but when it comes to senior, I'm giving some leniency. Can't be. It should be uniform and certain.
But company can do, they can reduce the penalty also if in case they find that this is not commensurate, or their immediate relative has done and he has given some explanation. So something can be.
Certainly. So if there are reasons, good reasons for reduction of penalty, the penalties can be reduced. It has to always be proportional it has to commensurate and be proportional to the offense. But mere reason, because it is not a penalty on DP but on the immediate relative, that in itself is not a factor to lower down the penalty.
Okay.
Something else is required.
When pre-clearance is needed while exercise ESOP through sale to cover mode, should the pre-clearance be for the entire market value of the exercise, or should it be only to the extent of shares which will be sold in the market by an ESOP trust for benefit of insider trading regulation?
Right. So it's only to the extent the shares are to be sold for cover to sell, for that the pre-clearance is required. Reason being, the ESOP trust, when it is selling the shares in the market, it's on behalf of you as a person. So you have to take that pre-clearance approval from the compliance officer for that.
Okay. SEBI has prescribed a detailed guidelines for personal security transaction of employees in the mutual fund industry. If every company follow these guidelines, it is clear compliance of the insider trading regulation. So, what is the question? So, any reaction on Moini on this? Because mutual fund industry they have prescribed now.
Right now, the AMC has to for all the designated persons in the this AMC have to very well disclose the schemes in which they have invested, and if even they are switching from one scheme to another scheme, they are not allowed to do so. So I think he wants to say that if the similar kind of thing will be applied in the listed company for the securities, I think that will help in the creating more robust in the insider trading compliance per se.
So we have given the answer of all queries. Now, as a ritual, we are giving 2 minutes each to both the panelists. So Ravi, what is your view on the entire thing, and what is your guidance to all the participants?
So I feel I would say this, that companies must review their existing systems and really ensure that the systems should not only remain on paper, they should become part of the culture. They should use IT and even the sophisticated tools to help their designated persons comply. Approach should not be of that cop who hides behind the bushes and jumps onto the road to hold the vehicle for guilty. Approach should be of uh, educating them, sensitizing them, and ensuring that less and less and probably lesser violations are committed by designated persons. And at the end, why this is why there is a reason for companies, fiduciaries, and intermediaries to pay this much weightage and credence to complying with these requirements. They may appear to be procedural. Somebody say that these are procedural. Let me clarify, these are not. In case of Abhijit Rajan versus SEBI decided by Supreme Court, it is clearly discussed that the principle of de minimis does not apply to insider trading regulations. One may say that, oh, that is for the core insider trading violation. But the entire point is that this is a paraphernalia. This is an ecosystem in form of the code of conduct or the internal control system, which eventually prevents insider trading from happening, from it becoming a deep-rooted phenomena in the securities market. And therefore, this is why the company should stop it, should educate, sensitize, and review their policies and systems, and take advantage of the IT capabilities that we have in the modern world to really take the compliance to the next level. While the compliance officer and board and audit committee has to do a very meticulous work to design a compliance structure, help of professionals should be taken for that. But at the same time, the user experience for DPs should not put them to the peril of understanding the complex language of law. It should be made easy for them so that they have very clear visual or whatever signs, in whatever way I would like to put it, in form of a comic or infographics or banners or stickers or push notifications to their devices, that they are able to comply in most simple manner without much ado. I think that's what I would like to say.
Moini, your point of view?
So my say is that every violation of insider trading behind every violation of insider trading is not the malified intention. So help the designated person to understand and to comply with this law. Now the SEBI is also trying to automize the many of the processes in the insider trading so that the various defaults which be happen because of only that I forgot to do that, it will be minimized. Like that PAN number auto be freezed. It helping even the company. SEBI is coming up front to help the companies to mitigate these insider trading violations. So help the employees to understand this law and help them to comply with this, like other law.
So thank you very much, Moini. Thank you very much, Ravi, for giving detailed presentation on the applicability, concept, and how company should, and Ravi to tell about the legal cases, legal implication, consequences, and how people should do this. I think this was a very good session relating to the education about this concept of insider trading and applicability on the employee and the vis-a-vis company relating to employee. Thank you very much, both of you. Thank all participants for attending this webinar. Friends, this journey of knowledge sharing will continue, and we will come out with a new topic on next Friday, 7th February, with something which is evolving, something which is live, something which is mind-boggling and always confusing in the professional's mind, corporate mind. And we want to try to solve their issues by discussing with the professional, discussing with the our other regulator, and discussing with every possible way. And when we are getting questions from our professionals, that is also one of the way to explain and to tell. When you share your question, that is also a very good indication that the confusion, non-clarity, multiple meaning, different perspective looks in the questions, and we try to solve that. With this, I think our journey of sharing knowledge is growing every day. Today was 206th webinar. More than 140,000 people have attended our webinar or registered. And this is one platform where people can take, discuss, and then all the webinar which we have till today, and this is available on our website corporateprofessional.com/webinar. You can download any webinar which is there. You can go to the YouTube channel and get all the webinar which are there, and you can listen at your leisure also. And sometimes some queries which is not clear, some issues are there, you can do this. With this, I thank both my speaker, all the participants, and we'll meet again on 7th with a new topic, new thing, and new shows. Till then, thank you very much.
Thank you. Thank you, everyone.